Have you ever wondered if you could get a personal loan with a 300 credit score? That's the big question, isn't it? You see, a credit score is a numerical expression that lenders use to assess your creditworthiness. It's like your financial report card. A lower score can make it more to get approval for loans, but don't fret. Well, today we are going to discuss how you can get approved for a personal loan even with a low credit score. Stay tuned. And don't forget, if you enjoy our content and find it helpful, please hit the like button and subscribe to our channel for more informative videos. Before we delve into the process, it's important to understand what a credit score is. Picture it as your financial report card, but instead of grades, you're scored on how well you manage money. It's a 3-digit number that lenders use to assess your creditworthiness, that is, your ability to repay a loan. Now you may ask, how is this score calculated? Credit scores are determined by 5 key components: payment history, credit utilization, length of credit history, types of credit used, and recent credit inquiries. Let's break them down. Your payment history, which accounts for about 35% of your credit score, is all about whether you've paid your past credit accounts on time. Credit utilization refers to how much of your available credit you're using, accounting for around 30%. It's generally recommended to keep this below 30%. Length of credit history, making up about 15% of your score, refers to how long you've had credit. Older accounts generally mean a higher score. The types of credit used, contributing to about 10%, looks at the mix of credit accounts you have, such as credit cards and loans. Finally, recent credit inquiries, also accounting for 10%, considers how many times lenders have requested your credit report recently. Too many inquiries in a short period can lower your score. These credit scores fall into ranges: excellent, good, fair, poor, and bad. An excellent credit score is typically above 750, while a score below 580 is considered bad. Higher scores increase your chances of loan approval and getting better interest rates. Why is this important? Well, for one, lenders view your credit score as a measure of your financial responsibility. A high score tells them you're good at managing credit and likely to repay the loan on time. Now that we know what a credit score is and how it affects our loan approval, let's move on to the steps to get a personal loan with a low credit score. Getting a personal loan with a low credit score may seem challenging, but it's not impossible. Let's delve into the steps you can take to secure a personal loan even if your credit score isn't up to par. First off, understanding your credit score is key. It's important to know where you stand and why. This can help you figure out your best options for getting a loan. So, start by getting a free credit report and analyzing the factors affecting your score. Next, let's look at some options that might be more lenient towards low credit scores. Credit unions, for instance, are member-owned financial cooperatives that often offer loans with more favorable terms than traditional banks. They tend to consider your overall financial health and not just your credit score when evaluating your loan application. So, if you're a member of a credit union, it's definitely worth exploring this route. Online lenders are another great option. They have lower operating costs than traditional banks and can therefore offer competitive interest rates. Many online lenders also specialize in lending to individuals with low credit scores. Just make sure to do your research and choose a reputable online lender. Secured loans are also an option. These are loans backed by an asset like a car or home. If you default on the loan, the lender can take the asset to cover the loss. Because there's less risk for the lender, you may be able to get a secured loan even with a low credit score. However, keep in mind that this option comes with its own set of risks. Now, no matter what option you choose, it's crucial to shop around. Different lenders offer different interest rates and loan terms, so take the time to compare your options. This can help you find the most affordable loan for your specific situation. Many lenders offer a pre-qualification process that involves a soft credit check, which won't hurt your credit score. This can give you an idea of what terms you might qualify for with different lenders. Lastly, don't forget to read the fine print. Make sure you understand all the terms and conditions of the loan, including the interest rate, repayment terms, and any fees. This can help you avoid any unpleasant surprises down the line. In conclusion, While getting a personal loan with a low credit score can be a bit more challenging, it's certainly not impossible. Understanding your credit score, exploring various lending options, shopping around, and reading the fine print are all crucial steps in the process. By following these steps, you can increase your chances of getting a personal loan despite having a low credit score. While it's possible to get a loan with a low credit score, improving your credit score can open up more options and better loan terms. So let's dive into some practical tips to help you boost that credit score. Firstly, the golden rule of credit scores. Pay your bills on time. Seems simple, right? But it's surprising how many people overlook this. Late or missed payments can significantly hurt your credit score. And remember, this isn't just about your credit cards. Your utility bills, rent, and even student loans all play a part. Next up, reduce your debt. Now, this might sound like a daunting task, especially if you're already struggling, but it's not as impossible as you might think. Start by creating a budget and sticking to it. Focus on paying off high-interest debts first. Once you've cleared those, move on to the next. And remember, even a small monthly payment towards your debt is better than none at all. Thirdly, keep your credit utilization low. This is the amount of credit you're using compared to your total available credit. For example, if you have a credit limit of $10,000 and you're using $5,000, your credit utilization is 50%. Try to keep this percentage as low as possible, ideally under 30%. Another key point is to avoid opening too many new credit accounts at once. This can signal to lenders that you're a high-risk borrower, which could lower your credit score. Lastly, regularly check your credit reports. This will not only give you a clear picture of where you stand, but also help you spot any errors that could be dragging your score down. You're entitled to a free credit report from each of the 3 major credit bureaus every 12 months. Make sure you take advantage of this. Improving your credit score may take time, but it is a worthwhile investment for your financial future. Remember, every step, no matter how small, brings you closer to better loan options and financial freedom. So, keep at it, and you'll soon see the benefits of your hard work. Let's quickly recap what we've discussed today. We've embarked on a financial journey starting with the big question: can you get a $50,000 personal loan with a credit score of 300? The answer, as you've learned, is yes, but it requires some strategic planning and understanding of the financial world. We've delved into understanding credit scores. The importance of credit scores cannot be overstated in today's financial landscape. It determines your creditworthiness and affects the interest rates you're offered. A low credit score like 300, while not ideal, doesn't mean you're completely out of luck. It just means you need to be more resourceful and patient in your quest for a personal loan. From there, we walked through the steps to get a personal loan with a low credit score. We stressed the importance of doing your due diligence and researching lenders who specialize in bad credit loans. We also highlighted the need to understand the terms and conditions of these loans, as they often come with higher interest rates. Remember, consistency is key. Regular repayments not only reduce your debt, but also help to gradually improve your credit score. Speaking of improvement, we also touched on tips to enhance your credit scores. Establishing a history of on-time payments, keeping your credit utilization low, and regularly checking your credit report for errors are all effective strategies. It's essential to remember that improving your credit score is a marathon, not a sprint. It might take some time and discipline, but the benefits are well worth the effort. In conclusion, securing a $50,000 personal loan with a credit score of 300 is indeed possible. It's all about understanding the financial terrain, being strategic, and taking consistent steps towards improving your credit score. It may seem daunting, but with the right knowledge and a bit of perseverance, you can navigate the financial world, even with a low credit score. Remember, a low credit score doesn't mean you can't get a personal loan. It just means you may need to be more strategic in your approach. Thank you for watching, and stay tuned for more financial tips and tricks.